When bank stocks go down, IT stocks go up. But is it true or not? Let's take a look at the 14-year history behind it. IT and financials are two sectors that are most popular sectors among investors on Dalal Street. These two sectors have historically shared an inverse relationship over 70% of the time in the last 14 years. That means 70% of the time when IT stocks didn't perform well, banking stocks did. According to an analysis by global brokerage firm Jefferies, since 2010, Nifty IT and Nifty Bank tend to perform in opposite directions. Jefferies India equity analyst Mahesh Nandurkar says, as compared to the Nifty, on a trailing 3-month or 6-month basis, the relative performance of IT index and banks index has been in the opposite direction 76% and 70% of the time respectively. As per the report, even if one considers longer periods of 1 to 2 years, the opposite performance sustains for over 60% of the time. Now, the fundamental reason behind this is that banks tend to outperform during times of favourable macro like stable and strong INR, falling yields, strong growth, etc., while IT tends to outperform during weaker macro, rising yields or inflation and weakening rupee. Together, financials and IT account for about 40% of MSCI India, 50% of Nifty, 33% of FYI investment in financials, 10% of FYI investment in IT. According to Jefferies, valuations seem to be reasonable for banks. Jefferies' model portfolio is overweight lending financials by 2 PPT, which is percentage points, while IT is the largest underweight by 4 PPT. The outlook on the IT sector seems to be weak. There is mid-single-digit growth guidance and no increase in employee headcounts for FY24. However, despite a weak outlook, valuations for IT companies are still above the historical averages. March quarter was the first quarter with some disappointments for IT majors. As per Jefferies, more disappointments are likely, especially in the mid-caps. For large caps, EPS estimates are 1 to 6% lower than the consensus. In the last 1 year, Nifty Bank is up around 26%, while the IT index has lost 4.6% of its value.